It's quite good that I'm over here. It's been a long time since I've been in this part of the world. But one of the things I did with sort of creating Bitcoin was I also did a lot of work on Islamic finance and the concept of riba and what that means. And people get that wrong. They think it's just interest rates, but it's not. It's actually not having value. Making money just by having price go up. That is what the concept of riba is really about. The concept of not creating wealth, underlying capital. And this is the problem we have in this industry right now. So let's get on to this and what really I see and why I created Bitcoin in the first place. And it's not a cryptocurrency. That's the first myth people have got to get rid of. There is no encryption in Bitcoin at all. So number one, Bitcoin actually was IPv6 enabled in the first version of Bitcoin back in 2009. People don't realize that. It was turned off after I stopped being part of the development team. So IPv6 enables end-to-end connectivity. And that was part of the foundation of Bitcoin. Bitcoin's not a peer-to-peer network the way people say, like Napster type things or torrents. It's an end-to-end communication platform, allowing individuals through IP to IP to connect directly. Not having Facebook, not having Google, not having any of these big tech giants tell you what you can and can't do. Direct person-to-person communication. And to do that, we need scale. You can't have multiple blockchains. That's also a mythology. As soon as you have multiple blockchains, it's like having multiple internets. What does that really mean? And if everybody has multiple ledgers, well, WorldCom, they had multiple ledgers. Bernie Madoff had multiple ledgers. So think about the prohibition about honest records. If you want to have honest records, you have to have a set of records. If you can have multiple sets of books, if everybody's getting their own version of things, there's no honesty in it. There's no way of tracking it. It doesn't stop fraud. The only way it stops fraud is to have a public record. So IPv6 is essential because we need scalability. Right now we have something like 30 billion machines that aren't connected properly to the internet. In the next few years, we're going to have over 100 billion machines. On IPv4 with 4 billion IP addresses, of which 2/3 of them are not usable, never going to happen. You're always going to have a central hub, big Silicon Valley company sitting in the middle, sucking your data. I don't like that model. That's also why Facebook, etc., don't like me. I want to see a model where everybody connects without going through a big Silicon Valley company, where we have IPv6 and Bitcoin interacting, allowing end-to-end connectivity between machines, people, everything, everywhere. A universal system where secure mobility so that your phone can access all of your devices, your car, your house, everything. And right now, that's far more secure because this sort of concept of connecting to the Silicon Valley company that maintains a database of all your access is a horrible, horrible model for security. It means it's easy for someone else to access and take over. If you control all of your systems and there's no middleman, that can be secured. As soon as you add big company X, and big company X gets attacked all the time. We saw even with DigiNotar, the big sort of European PKI provider, they got hacked, and because of that, Google got hacked globally, and Microsoft got hacked globally, and every single email of every single dissident to do with either Microsoft or Google was harvested. And everyone downplays that going, oh, it's only email. Nice. Love that reaction. So I want to see a world where it's really, really hard to attack things. Not because we're making crunchy shells, but because we're having end-to-end security. Right now, you can, in an afternoon, scan the entire internet, every single IP address available, mapped. Right now, if you want to do that on IPv6, you should be able to finish by about the year 3500, give or take. So you're not going to ever do it. You can't even scan a local network. If you do it non-sequentially and actually randomize addresses on a /48, it's secured just because it's so difficult to actually find anyone doing it. And it's so obvious that someone's doing it. To scan the network basically means someone like a large government actor needs to actively attack your whole network, signaling that they're doing it. That's the difference. So scanning this stuff's harder. It's secure and private, not because of all these other cryptographic things, but because of economics. I mean, yesterday, I don't know if anyone saw, but there was a release saying how the American government accidentally monitored every transaction over $500 around the world. I mean, accidentally, for 15 years. Oops. Sorry, we've had a whole set of departments scanning every transaction around the world for 15 years, and it was an accident. 10,000 people employed, yada, 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 accident. This becomes nearly impossible to do when we're talking about something like Bitcoin. When we're doing it properly, not the whole BTC, have your address bit, but actually cycling addresses so that they only get used once. And then it becomes private. Because over a global system, where we're having IP to IP communications and at scale, then what we're talking about is phenomenally hard to model. When I talk about scale, I'm not talking like IBM talk with 3,000 connections per second or some BS like this. I mean, in the next decade, between 1 and 10 billion transactions per second. And I mean growing from there. That scale. Not multiple chains, a chain. That is my goal. One system doing that. And when I say that, I don't mean with this cost structure that is higher than Visa right now. I don't mean Lightning Network at $1 a transaction. I mean 1,000th of a cent. That's my goal. It's very simple. So I want to see Bitcoin as a base layer. We need expanded address space for this. We need everyone connecting directly. So to do this means we need an infrastructure where your mobile phone and my mobile phone communicate directly without going through big American Silicon Valley company A to big American Silicon Valley company B. Not interested. I want to see people directly communicating, straight end to end. That is the model for Bitcoin. And to do that, we need every single device owned by every single person, not going through NAT, not going through VPNs, having its own connectivity. And that's never going to happen on IPv4. That's going to require V6. If the Americans don't want to do it, I don't care. There's a big world. We have a lot of interest in a lot of areas around the world. Why? Because, well, there are a lot of people and there's a lot more education happening everywhere right now. So we have expanded address space. We have all of the ability to connect all of this directly everywhere. So some of the research I've been doing in the last decade has been moving around this area. So when I sort of moved away from developing on Bitcoin in 2011, the concept wasn't to forget about Bitcoin. It was to develop everything else that needed to be done. Bitcoin was meant to be set in stone. Unfortunately, like old Solon in Greece, at the time, like 200 years before Aristotle, etc., the first thing people did was change all the stones and change the laws. But you try, and people don't leave it. So SSL, lots of problems. Right now, people don't even realize that there is this thing called a zero cipher, which is a 0-bit encryption. Yay. That's used by Google so that you can force things down to have it's fully SSL enabled, but hey, no encryption, which means you get to see everything without it. But CGA was always something that interested me, cryptographically assigned addressing. The reason for this is instead of RSA keys, we can use ECDSA. That is in the extended versions of CGA later. But that now allows us to have IPv6 private addressing, mobile addressing, given based on a key structure. Now, that key structure can be linked to identity, but done securely. The way that we do this in something like Bitcoin and with this is we have additive keys in ECDSA. Additive key structures allow us to completely and privately reissue keys for every communication. So I can connect person to person to someone, and then as I'm doing this, negotiate all the routing functions, and then reissue a new key, which is done through a ECDH process, where effectively I now have a additive key structure, which is linked to my identity provedly, except not even the American government, the NSA, can't even tell what it is. So it's old-fashioned sort of justice system if you want to do that. You provably have a trail, but you can't mine, like the NSA do, every communication around the world anymore. There's a difference. You want to have an audit trail for the bad guys. You want people who are doing the wrong things to be traced. What you don't want is every single innocent person on earth being sucked into a dragnet of, oops, we accidentally monitored every transaction over $500. That's a different thing. So Internet Protocol security extensions allow us to integrate both of these things simultaneously. We can actually integrate DNSSEC right now. So things like Paymail and a few of the other concepts that have been created by nChain and partners allow this right now. So we actually have companies like Handcash and things using this sort of technology where you have an identity, it's stored in the DNS system in DNSSEC, and every time you communicate, you get a new key. And it's done securely and traced, and we can extend that into CGA as well. So this would allow us to have someone having an identity, approval identity for a second person, and still, not even the NSA will ever monitor communications, ever. Full stop. So CGA++, we can get rid of some of the trade-offs for time, memory attacks, etc. We can actually make it more secure. We can integrate it directly into Bitcoin, and that gets us to IP transactions, end-to-end communication, which was always the goal of what I wanted for Bitcoin. None of this cryptocurrency trading. Trading doesn't do value. There's no value in trading the way that they're doing. There's no commodity trading because there's nothing but speculation. So speculation is just, I'm going to make money because someone else is losing money. So there's a limitation on how we do public key infrastructure. Again, crunchy model. One guy in the middle. That guy gets attacked, everyone's gone. The whole system breaks. That's wrong. If we have a system where individuals own their keys, where it goes back on-chain, publicly auditable, that gives us something completely different. We can set up something now where rather than having to trust DigiNotar and hope that big company that holds our keys maintains everything securely because, well, they'll never be hacked. We end up with the ability to create a structured format within Bitcoin exchanges to negotiate all this stuff, sell IP to IP, not with the existing models. So not having to go to a large telco and have them own your communications. The difference would be if we can get to the scale we're talking about, billions of transactions a second, you can buy and sell packets by the packet. you can sell a single packet. That can be a jumbo packet. It can have large transactions. But that is a completely different model for telecommunications. You don't need Orange. You don't need Virgin. You don't need any of these large players. You can move around the world. You can negotiate and, by auction process, the cheapest packet data for what your application needs. And you can sign up and buy it packet by packet. That's the model I'm talking about. So it is a radically different version of all this. It is going back using the ability to map individual identities, either through DNSSEC or even more advanced things in time, allowing for all sorts of direct use cases. Web server access, not the typical model where a few large players own everything, back to the distributed model that we had in the first place, where instead of having large data centers own everything, we can now individually have different small companies compete. Once again, it takes the model away from large oligarchies into the ability for anyone with any specialized service to be able to offer something. Again, local link payments, the ability to not only have direct payments on Bitcoin, but the creation of central bank digital currencies, etc., to have payments at any level you like. Years and years ago, there were two countries I spent time in. One was Kenya and one was in India. And Kenya, for instance, I remember people in some of the slum areas buying individual matches. There's poverty in this world. So we shouldn't be sitting there going, Bitcoin's not for people who earn less than $2 a day. It is. We should get to the stage where someone can earn money doing small tasks. Not like Uber, not that model, but allowing people to directly communicate, sell, buy, etc., and not put a limit on what they can do. If they can make money selling individual matches, good. If someone can collect something like garbage and get paid by the bag, good. If someone can make money doing small tasks, good. If they earn 5 cents every time they do something, good. That is how we make commerce. We don't put bottom limits on things. When Arrow and others talked about transaction fees, the Carnot problems in economics come from transactions having a base limit. When we start pushing that down to tenths, hundredths, and eventually thousandths of a cent, the whole economic model changes, allowing messaging not because we go through SMS gateways, but directly, person to person. And everyone will go, oh, but this destroys companies. We have this thing called Schumperian dynamics. One company goes, another one comes. That's a good thing. It's dynamic. The companies that survive are the ones that are best, the ones that deliver to the consumer. That's the whole thing, the consumer. This is not about making big company profits bigger, not about Google, not about Facebook, the consumer. So Rockefeller had a lot of interest in this region over 100 years ago now, and he's hated. Lots of people hate Rockefeller. Why? Oil baron. What does that actually mean? Well, Rockefeller took the price of oil and pushed the price down to 7% of what it was before he came in with his business. That's a big difference. So lots of people hate him. He's driving out people out of business. Yes, because they couldn't deliver to the consumer for the same price. So my model's the same. I'm not going to tell you Bitcoin should be worth X, Bitcoin should be worth Y. I have a simple model. I'm going to scale, and not to thousands of transactions, not to millions of transactions. I want to see millions capability by the end of this year. I want billions this decade. And I want to push down the price of transactions so low that Amazon cries. If they don't deal with us, they'll be out of business. Why? Because right now, every transaction that gets written to Salesforce.com costs about 0.2 cents. I'm going to make it 1,000th. Every transaction that gets written on Oracle databases costs about 0.4 cents. I'm going to make it 1,000th. And if you hate me for that, so be it. Thank you.
Yeah, thank you, Greg, for that extremely interesting and most probably revolutionary approach to blockchain. So now we are in a world that is very confusing. So a lot of people making money from this digital money around the world, which is creating a massive misunderstanding between what is Bitcoin, what is blockchain, and so on and so forth. So how can we, at least here in the Gulf states, to explain this to the regulator and to the government, to support, for instance, the efforts of the blockchain groups here in the Gulf states? So what's your recommendation?
The first thing I'll tell you is that anyone who follows markets is dumb as dirt. There's a reason for that. Markets don't lead. If you followed the market in the 1990s, you would not have invested in Google or Amazon. In fact, Amazon was a small player that petfood.com was worth 10 times the amount. No one wanted Amazon because it wasn't doing all of the market metrics. It wasn't doing all the things that people said. So right now, the first thing you do is you don't follow the market. Dumb money follows the market. In 1929, dumb money followed the market. In the 80s and Black Friday, dumb money followed the market. And dumb money ends up where dumb money should end up. So the first thing you've got to do is think long-term, invest, not think about how do I make money by gambling. I mean, in this part of the world, riba. Think about how do I make money from value? What am I delivering? What will have capital? And you sell capital gain, wealth, creation of actual stuff, not finance for finance sake. How do we make something that makes the world better? If we make things cheaper for the consumer, if we make things so that there's a single global secure and private ledger, think about this. Bernie Madoff got away with things because he had about 7 sets of books. Imagine if there's one. We have a single blockchain and we can register using a hash the beginning of every year's trading, then auditors come in, there is zero fraud that he can do. There's no second books. WorldCom, same thing. Enron, same thing. There is a litany of corporate frauds that are stopped. Next, we have this problem right now with remittance around the world. It is expensive. The M-Pesa system costs 30 to 40 cents a transaction for people who earn dollars a day. That is horrible. I want to see a system where, because it's so cheap, people working overseas can send money back as they need to. I mean, I've talked to a lot of people like Filipino maids, and one of the problems they have is they send money back every 3 months, and it goes to the husband, who might be at home, not picking on husbands here, I'm one, but he then spends it how he wants, and it doesn't go to the kids. It might go to another case of beer, and yeah, money goes. If you can give money where it's needed as you need, you can have control. And if that Filipino maid can get a message from her son or daughter going, I need a textbook, and pay for it every time, because the transaction fees are so low that nobody cares Nobody's going to sit there and go, ooh, I'm going to spend 1,000th of a cent. Should I worry? Nobody. No matter how poor anyone is on this earth, nobody will care about that level. So it means rather than every 3 months sending money home and hoping, you can review everything. You can manage your finances. And the person earning the money, the person working overseas, should be able to do that, not sitting out there hoping someone back home isn't wasting it, but being able to review every transaction. Make sure that, yes, the kids are getting vegetables. Yes, their textbooks are being paid for. Yes, at the end of the week, I'll let you have a beer. So that's the message we want to sell. Not crypto go up. No. Consumers, people, those in poor areas benefit. That's what this invention should be.
Thank you very much for the inspiring talk. Actually, the model you presented looks too good to be true, in my opinion. So my question is that this model is going to make everyone connected with like equal privilege, I would assume. So it is said before that if we take the wealth on earth and distribute it equally among all people, then 10 years after that, we will have the same distribution of rich and poor. So if we do the same thing with this approach where everybody is like connected using this IPv6 with blockchain, so they are going to have more or less equal privilege, equal access. So is this going to create any business model with the monopoly that we are having right now with these giant IT companies?
Monopolies only exist because of government and other constraints. Monopolies don't exist under competition. They might come and go, and large players will exist for short amounts of time. That's a different thing. Do we want equality? I'm going to very simply say no. And I'm going to say that very simply because equality is equally poor. There is no such thing as equal and wealthy ever in human history. It is a horrible, horrible, horrible concept. Okay, so Muhammad talked about the fact that wealth is good, but wealth should be built, wealth should be developed, not by speculation and gambling, but by the creation of wealth, which is trade for doing something that people want, goods and services, value, virtue. So we shouldn't be trying to equalize things. We should be giving opportunity. By lowering the amount of transaction fees, we're not equalizing anything. We're not taking away and expropriating from one to give to the other, because all that does ever is push down wealth. If we expropriate, people hide wealth. What we should encourage is the development of wealth. In the Islamic Golden Age, in the period 800 to 11 to 1200, the concept was, how do we build, how do we make an economy that actually grows? Not because of finance, but creating financial systems that allow for investment in equity in the company so that you have wealth. So again, this comes down to, how do we lower transaction fees? Homer de Soto, welfare economist, talked about, if we can get people registered, their property, then they can look at microloans, then they can become part of the economy of the world. So if we reduce the amount of money it costs to take an image of their property, and over time allow them to demonstrate that they've been living in an area, working in an area, doing things for time, to build not a government identity, but an identity of records that they have of their life. And they make that because it's cheap and easy. We give people the ability to take charge of their own life. Not, we are going to paternalistically do this for you. We give you the opportunity. Whether you take that is up to you.
We can take one more question. Thank you, Dr. Craig, for this interesting and amazing presentation. Just
considering the blockchain as the protocol of value, and considering also our current version of the internet, which was all the problems that it has, if we redesign or re-engineer the OSI model, where the layers of the internet was built, and I believe it's immaturely, where the blockchain or the protocol of value could fit on those 7 layers?
It won't. The OSI model is taught to everyone, but it doesn't really exist. So what we had on the internet model was different. But OSI came along and created a model after networks were already there to try and explain and shoehorn things in. And that's why we have layer 2.5 switching and all this other fun stuff, because a bunch of academics who never really integrated anything in the world decided to explain it. And we have a lot of that in the blockchain world right now. We have, oh, I've never actually done anything to do with mining, but I'm going to define what a node is. So my answer is, what we need to do is get more practitioners, more people who actually do, and less who sit in ivory towers. Always have both. I mean, it's one thing to study, I still do. I'm 51 and I haven't been out of university since I was 17, literally. So study is a good thing, but apply it. I'm happy to ask one more. Or...
Thank you, Dr. Wright, for your vision, which, as the gentleman here said, it's ideal, the totally decentralized system. I want to ask you about your insight about proof of stake. Now, most of the blockchains are moving to it. They still call themselves decentralized, while in the core, they are moving slowly towards the centralized model. Control. And where do you see the market going in the future? In which direction?
As I said, the market is a follower. The market is a big lumbering beast that charges down wrong paths and then turns around and generally wrecks things in its path. It's sort of like a rhino in a china shop, not a bull. And it charges down one aisle and then it turns around and realizes it's gone the whole wrong way. So where the market goes is, who cares? Next, you asked about proof of stake. It's a horribly stupid backward invention. Basically, it's proof of equity, proof of shares. When you have stake, that means you always have stake. It is an anti-innovation invention. And a lot of Silicon Valley loves it. Why? Because we will never have to compete. Facebook owns a big chunk of things and they don't want to compete. They don't want competition. Proof of work means every single sort of time there's a new chip, you have an opportunity for change. That's how you get monopolies, when you don't have change. When you own proof of stake, you get money rent-seeking for doing nothing. You sit there and money comes in. You have no incentive to grow the system, no incentive to invest in the system, no incentive to scale the system. So guess what you do? Nothing. So go for it. I encourage every single other competing blockchain globally to go to proof of stake, and I will even help you do it. Please, I'm begging you, do it. I will help solve the ETH problem, which I can. If he'd finished university, he would know how. It's basically a multi-level knapsack problem. For those who understand a little bit of computer science, I've said traveling salesman, but the actual thing is it's a knapsack problem where you have multiple knapsacks. But the problem is that it's a variable knapsack because each node changes over time. By doing proof of stake, what you can actually do is have a pre-announcement of the size of the knapsack. Now, if you understand reductions in network science, what you can do by having proof of stake is simplify the reduction path. So that means you can actually pre-issue staking paths. allowing someone to make it much more effective. So plasma and things like that could work. I'll help them do it. If they want my help, I'll solve it. I could do it like that. Very happy for them to.